Surf's Up. Learn to ride the F&O waves only on Bloomberg Quint with Agam Vakil.
Surf's Up on Bloomberg Quint. This is Agam Vakil, and just like always, we're here to get a perspective on the futures and options market in Indian equities. Now, it's turning out to be a good week for Indian equity markets, with the Nifty 50 index gaining 1.8%, with index futures naturally seeing some long positions building up. I'm back from a 2-week holiday, and what hasn't changed in this period is the range based on maximum open interest. That is still between 9,500 put and the 9,700 call, and neither have traders seen a change in their India Volatility Index, which continues to hover around the mark of 11, with the Nifty put call ratio also standing at 1.26. So as we move into trade next week, what are these cues telling us about the direction of the Nifty? Is the Nifty steadily trending higher? And are there themes poised to give sharp moves? Let's find out. Joining us back this time and guiding us through these waves of open interest is Chandan Taparia, Associate Vice President, Motilal Oswal. Good morning, Chandan, and thanks for joining us. Starting off with my first question, how are you seeing the movements as far as the indices are concerned for this coming week?
Yes, in this week, market is up by around 1.65%, and recently it has taken support near to 94.50, and that was the 50-day exponential moving average. So it has regained its lost ground after the weakness of last 3 weeks, and now it seems that market is all set to surpass the immediate hurdle of 9709, and it may head towards 9800 for a new high lifetime territory in the market. We have seen sustained put writing, and the put call ratio has also moved up with falling volatility. So all these derivatives database are supporting the bullish undertone of the market.
Well then, is this your opinion about the Nifty Bank as well? Are you being positive on this one?
Yeah, we have seen the strong buying in Bank Nifty as well. Or in fact, Bank Nifty managed to hold its support of 23,000 zone. And if you remember, in the month of May and at the beginning of June series, the market has given the breakout above 22,978, 23,000 zone. And recently it has exactly taken support at the previous swing high. So it has worked as a classical support, which was earlier as a resistance. And that's why we have seen the movement of around 500 points in the Bank Nifty in last 4 trading sessions. So now it has to continue to hold about 23,333 to extend this move to us 23,700 and then lifetime high of 23,900 zone.
Okay, Chandan, so what are you tracking in terms of stock futures or stock options?
Talking about the stock activities, we have seen buying interest in selective NBFC, auto, PSU banks, and most of these are looking strong as per the price and the database are concerned. If I just go by sector to sector, in NBFC space, we like Bharat Finance, we like DHFL at current levels, while in auto space, Maruti's are preferred pick. The stock has seen the strong momentum in last 3 trading sessions after the consolidation. So it seems that the stock is all set to head towards its new lifetime high. It is just few points away from its lifetime high, and once it surpasses the same, the stock is all set to see the rally of 4 to 5% on the higher side. We have positive view on the Bharat Force as well. The stock has recently taken support at the lower band of the trading range and turned from immediate support of 1,065. So now 1100 is likely to act as a support, and slow and steady the stock can head towards 1160 to 1180 kind of levels.
There you guys have it, guys. Very plenty of stocks to keep an eye on as far as NBFCs and on the auto space is concerned. But I'm going to come down to Derivatives 101, and once again I want to remind our audiences that we are open inviting questions for our guests. And Chandan, once again, this week the question comes from Rohan Shah, and he asks, what is a bear spread and when is it used?
Yeah, Robert, it's bear put spread is a strategy which is having the negative sense in the market. And usually we do the bear put spread when we are expecting market to go down, but with the limited downside move. So in this strategy, let's say right now the Nifty is trading near to 9700 zone. And if I'm expecting the market to go down by 100 points, then I'll buy 9700 put and I'll sell 9600 put. So bear put spread is all about buying one at the money call and selling one out of the money call. So in this spread, I have to pay around 30-35 rupees, while my profit would be around 60 to 65 rupees. So in 100 points of the bear put spread, risk-reward ratio remains between 1:1.5, 1.65 levels. And ultimately, the strategy is to either hedge the market decline or go for the negative sentiment of the market.
Well, I hope that answers your question, Rohan. But that is all that we have for Surf's Up today. Thank you, Chandan, for joining us and simplifying some of that data for our audiences. And as for you guys, do come back next week and join us for yet another edition of Surf's Up only on Bloomberg Quint.